Okay, today we're gonna do a really short video just giving you my opinion as a wealth manager on what I think about financial media, in particular the TV channels that you're probably watching. There's a great commercial. Obviously it's not that great because I can't remember who made this commercial, maybe Fidelity or something. But the commercial starts where this guy is in bed and he's sleeping. And he wakes up, and as soon as he opens his eyes, there's a head here, there's a head here, a head, like people. And they just start talking. And they start going, oh, the S&P is up 5%, blah, blah, blah. And they're all saying something different, and it's like this chaotic little voice that's inside of his head, but they're really people. And so then he gets up and he goes and he gets a cup of coffee, and while he's making the coffee, everybody's leaning in and they're talking into his ear, you know, Janet Yellen is going to raise the interest rates and blah, 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 right? And so it's like this chaos. And then he goes in the elevator at work, and as the elevator's going up, all these people are standing around him, and now they're whispering because it's quiet, like in an elevator, all this sort of financial media stuff. And you know, the idea is that no matter where he goes, he's bombarded with all this information about what to do with his investments. It was a really great commercial, and that's kind of how I view financial media. In addition, they kind of make it complicated. I think they do this on purpose. Now, there's a couple reasons for it, but you watch like CNBC for a few minutes and you could really be confused. I mean, there's a lot of technical terms. They don't take a lot of time to really dumb it down for the person that's just taking a new interest or has some new interest in investing. They make it really complicated. I'll give you an example. They're making a big deal right now out of banks. Will bank stocks do better or worse with rising interest rates? The answer is really simple, but they have this long drawn out talk back and forth about book ratios and PE ratio, all this stuff, dividends and how the stocks performed over the last 52 weeks. And you know, that's great. I mean, if you want to look into it that deep, that's fine, but I'll ask you this question. Do you think banks do better when interest rates go up or when they go down? I mean, if you're a bank and your job is to loan money out for a set interest rate, do you think you make more money when you can loan at a higher interest rate or loan at a lower interest rate? It's pretty simple, right? I mean, it's common sense, and that's exactly how the bank stocks have been performing. Interest rates are going up, bank stocks are going up. Now, partially, they make it complicated because they have to cater to everybody. While you may be watching this and saying, well, I'm a retirement investor, you have a different focus than the day trader or the option trader or the short-term trader or the global trader, right? Forex trader, futures trader. Everybody has a different focus. And so what they try to do is they try to circle back to every single type of person. If I could draw a graph of what they talk about, it goes like this. Right? And so you've got everything from the day trader all the way over to the super duper long-term Warren Buffett type trader, and they're constantly giving content like this. So they're catching everybody, and then every now and then it resets and they go back and try to capture everybody. Now that's tough, right? They've got a tall order to be able to do that. You see, they got to fill all that time. The market's open from 9:30 to 4, but the financial media starts earlier, and they don't finish until that guy starts talking at 6, the really loud sports announcer guy. So here's the thing, it can be complicated. I have it on in the background, and sometimes I'm overwhelmed by the stuff that they go into. In reality, it all boils down to this. Do you think the stock is gonna go up or down, right? And we're just basically talking about what that means for your time period. What is your investment horizon? Now, most of you that focus in on me are retirement investors. So don't worry about all the short-term stuff. If you're focused on the long-term, then you don't really care too much about the Amazon Whole Foods deal, right? It doesn't really affect you. On the other side of that, if you're a day trader or a short-term trader, then you could care less about bond yields, right? It doesn't mean anything to you. So just take a moment and focus in on financial media for what it means for you. Don't fall for the trap with all the other stuff. It's very easy to think you should be going this way when your focus is this way. All right, well, I hope this helped. It's just a quick video just to update you here. It's Friday in the office, and so we're just kind of playing around with video ideas, and this was one of them. If you have any questions about your finances and the media has you a little concerned, that's what I'm here for. I'm going to put the email right there for you. You can email me directly. Also, if you have a retirement account, maybe an old 401k that you want to roll over, an IRA, Roth IRA, and you want somebody to do a little bit more than the buy and hold approach that you've probably been using your whole life, check out our website. What we do here, we call buy, hold, and rent. Very similar to if you own investment property. You would buy the investment property, hang on to it for the long term, but rent it out for that short-term income while you're holding it. We do the exact same thing with the investments in your accounts. Lots of detailed videos on our website and on YouTube if that's where you want to go watch them. And again, if you have any questions, always here for you. Have a great weekend. Talk to you soon.